My name is Eric Van Horn. I bought my first franchise in my 20s, and since then, I've owned 6 brands with 25 stores in 8 states. I've also helped 1,000 people find the right franchise for them. People like us who are not cut out for the 9 to 5 and like to work smarter, not harder. How do we find the right franchise, buy it, grow it, sell it, and how do we do it in a way to own the business without it owning us? Those are the questions, and I'm on a mission to give you the answers. Welcome to Franchise Secrets. Welcome to the Franchise Secrets podcast. Eric Van Horn here with today's guest, Patrick Findaro. And I think I said that right. Did I say that right?
Yeah, you said it right. Good job.
Close enough, huh? Close enough. Patrick and I got in touch a little while ago, and I love what he's doing out there. He's got 2 kind of different things, Visa franchise and then Vetted Biz. And they're 2 different businesses. And but he comes from like the JP Morgan type world, investment banker. Is that right?
So I was working in their asset management division and doing a lot of leverage for mostly Brazilian high net worth individuals and their companies.
All over the place. I mean, you were sitting in New York and working there, working in other countries, like working with people over there. How in the world did you get into franchising?
So yeah, it was kind of an interesting transition to the franchise world. After JP Morgan, I moved to Miami and I worked at a private equity fund that would lend money to multi-unit operators of franchises, some very large brands. And our investors were investing in the fund mostly to obtain an investor visa, the EB5 visa, which was $500K investment. Now it's $900,000 and you have to create 10 full-time jobs. So that's kind of how I entered both this investor visa space as well as the franchise space. And then my brother graduated from Georgetown University in Washington, D.C., where we're from. And he got a job in their leadership at the leadership development program at Restaurant Brands International, which owns Burger King, Tim Hortons, and Popeyes. So that's how we both got into the franchise space. And then we founded Visa Franchise back in 2015.
Visa franchise. Tell us a little bit about like exactly what does that company do?
Definitely. So we have clients from all over the world. We've had 350 plus clients, 58 nationalities last time I checked. And clients engage our services to find and analyze different businesses, principally franchises and licensed business models that might be a good fit for them in the United States and also be eligible for an investor visa. Our clients generally invest between 100 and 300,000 or more in a US business that's going to have at least 2 to 3 jobs. And we have 2 very different types of clients. Those that we vet the business model, essentially the franchise system. We look at a lot of different factors, the information on the parent, on the owners of the franchise system, if there's been bankruptcy, litigation, looking at the past 3 years financials, unit level economics. So we vet that from a business model standpoint. And then we also have clients, generally high net worth individuals, where they want us to also find an operator. And it's a lot harder task. And generally, what we do is some of the franchisors and licensors that we work with are able to run the business on a day to day basis, perhaps take a minority interest in that unit, in that location. And then our client is more a CFO, strategic, and they're not as active day to day. However, they're still involved in monthly management meetings and reviewing financials and helping define the strategy. So the 2 really distinct clients.
Yeah, I want to focus on, because I think a lot of people that listen to this podcast are focused on basically it's the owner operator that comes in and does that visa, right? They lower investment, exactly. They come in and they're dealing with that. I want to focus on that person that has a higher net worth. I want to talk about you vetting the franchisor and then finding a manager for that new franchisee to come in and how that works. So talk about how you, as basically a third party, right, are investigating the franchisors. And what's the relationship? Who's paying you? Is the franchisor paying you, or is it the person that is coming over to buy the franchise? Where's the money coming from?
So yeah, for sure. We always get engaged by the immigrant investor, and the fees range, but starting at least at $2,000, depending on the package. And for that, we work with our clients for up to 12 months. And we usually starts with an initial study where we've already looked at, 1,700 plus franchises, and we've identified about 80 that are willing to work with E2 visa holders and are available at the lower investment thresholds of 100, 200, 300K, and are expanding in markets that our clients want to move, like Florida, Texas, California, for example. Most of those franchisors will also provide us compensation, but it's not always the case. We've had some pretty big clients, like one that expanded and did a multi-unit development agreement with IHOP, and we didn't get any compensation on that client engagement beyond the initial fee that the client paid us. So it really
So
depends.
so
Um,
sometimes you can double dip a little bit and sometimes you can't, but it's all upfront from the beginning. And that's not, necessarily going to be, it really comes down to the franchisors that want that immigrant to come in under that program. And their franchise is like kind of designed for somebody like that.
Exactly. So they can provide a lot of initial support, ongoing support. We work with franchisors that speak Spanish, speak different languages, so they get the E2 visa investor more comfortable with the system. There are even some opportunities that you can just speak Spanish. You don't even need to speak English. There's very few of those opportunities, I have to say, but there are franchisees that we've advised on, and many more that are part of franchise systems that the franchisee owner operator doesn't even speak great English. They're able to run the business in Spanish. So
Makes sense. Can you give me an example of some of the different brands or industries, whatever you want? If it's not specific brands, like the kind of
sure.
industries.
So one we just did a webinar, a live stream last week with Estrella Insurance. They're out of Miami. They've been around 40 years. They have 160 locations, and they target the lower to middle income, mostly Hispanics, and they're growing quite a lot. They've grown, I think, 40 units over the past 2 3 years. So that would be an example, and you can open up one for as low as 50K. So it's a good entry point into the US. And then beyond the insurance space, we have clients that are investing in business services, so open up a little more to like bookkeeping, even in taxes, real estate property management. We've had 20 plus clients invest in that industry. We've had clients invest in commercial cleaning, landscaping, education particularly for science, technology, math, early childhood. So a lot of service-based concepts, and then obviously food and beverage. We have worked quite a lot with this one ice cream chain. However, right now, it wouldn't be my top choice. And for the folks that are investing in food and beverage, we're trying to steer them to look at least operating in a ghost kitchen where they could invest 100, 150K or more instead of 500, 600,000 and just do delivery and takeout. So those are some
How
of the industries that we've advised clients on and that we think are promising for the next couple of years.
good, good. When you have a client that you're working with and they aren't going to be working in the business and they're going to be more of that advisory role, what's their background in the country wherever they're coming from? What's a typical background? And then what does it look like when you find them that right business and then
Sure.
they are more in that strategic role versus that owner operator role?
The typical profile, they own a company in their home country. To give perspective, we've had 3 clients that came from billionaire families. It wasn't necessarily the patriarch or matriarch, but it was the grandson or
Hmm.
daughter or son. So it could also be inherited money. But most often, they might have a company in Mexico or Brazil or somewhere in Europe that they're doing 5 million, $10 million of sales. They've had it for 10 to 20 years, has a pretty healthy margin. For them, it's not worth their time working full time, 40, 50 hours a week in a small business. And where if they could focus more on their efforts in their home country, they could be making 500,000, $1 million plus per year. So that's the type of profile of our client that seeks businesses that provide operational support.
when you find a franchise for them, for that person, the franchise, do you find the manager for them? Does the franchisor find the manager,
Great
or is it a
question.
mixture?
So we've done it a few different ways over the last 5 years. Our preferred option is when the franchisor has corporate locations that they could sell 51% of a corporate location at a pretty favorable valuation to one of our clients, or our clients start a new business with the franchisor or a related entity to the franchisor that usually has common ownership with the franchisor. And our client can come in with a majority share. And generally, they're investing all the capital or a large majority of the capital required to operate that new location. Obviously, if the franchisor is willing to match their capital contribution, which we do have a few of those franchisors, it makes it a lot more attractive. But that's largely how we're structuring.
So from a partnership agreement, that makes sense. So basically the new business owner is coming in as the bank, as the money person, and as and going to be involved in the operations, but they are not necessarily day to day. And the franchisor is not putting out all the money, but they are providing infrastructure. And I would imagine they're doing it for a number of different groups like that versus just a one-off scenario. Would that be right?
Yeah, yeah, great point, Eric. So generally, it's not worth doing all this if it's just going to be like a one-off. It takes a lot of our time. It takes the franchisor's time. So they want to aim to maybe have five of these type of investors to start, and then build up from there. And there's groups that we've had 20 plus clients with them. But it's an interesting niche because oftentimes if they're managing anywhere from 3 to 15 locations, it's a good fit for this type of business model. But as the investors come in, they don't come all together. You might have one this month and then 2 in 3 months. When professional operators get to 15, 20 units plus, they generally might want to, maybe the capital is going to be more costly through private equity or a bank, but they're going to get that $2 million injection, $5 million injection, and they're going to know the capital is coming. Where through this program, it's very flexible and there's a lot of different structuring that you can have. We don't know. It can vary in terms of when that investor is actually going to sign the agreement and wire the fund.
Let's talk about the some of the different ways to structure a deal as a partner, because I mean you're
Sure.
getting to see a number of different things. And there's probably some franchisors listening that are like, that's an interesting way to grow my corporate stores. And so what are some of the different partnership structures look like in terms of, where I go right away is the exit. Like where's their
Yeah.
built-in exit or off
Great
ramp
question.
for them?
I can give you an example of a deal that we recently did in the food space. It's a concept that's they do have sit and dining, but 30 to 50% is delivery and takeout, closer to 50% now with the pandemic.
Yeah.
And the client injected $250,000, the build out and working capital and all the needs to get the business started. The minority partner, the franchisor, injected very little capital into the business, and it was more sweat equity. Our client who invested the $250,000, they're entitled to 75% of the profits until they recoup their 250,000.
It's called
Um,
a preferred return, right? Is that how?
exactly. A preferred return, then it goes down to 51, 49% as per their ownership in the business. And then basically how it works, these E2 visa investors, if they're bought out, they could lose the visa. You have some though that don't mind getting bought out in 3 years because they have a green card pending or they have some other immigration solution and they don't need the business any longer. But for that deal, it was, I believe, after the third or fourth year, the 49% partner could buy the shares, and basically the investor would get another $100,000 above what they had invested. So, say in simpler terms, say they invested $250,000, they received back 200, or they received back the full 250. Then the 49% partner could say, "Hey, I want to buy the rest of your shares back. Here's $100,000. you're now out of the deal. I own 100% of the business again. And we have some groups, they have 5 locations, but they want to build up to 15. So they could have a pretty big exit, and the EBITDA goes way up, as you know, Eric, from 3x to
Hmm.
5x to maybe 10x, depending on the industry and the buyer. It's a win-win for everyone. The investor got their E2 visa for a certain period of time. They made a pretty nice gain on their investment.
Yeah, it's also time. They didn't have to put a bunch of time into that business
Exactly.
either.
So maybe they were investing just a few hours a month in the business,
Hmm.
where the day-to-day operator, you might have had multiple people owning that franchisor
Hmm.
that were involved in some capacity day to day.
So this would not be good for somebody that wants to come over, do the program, and wants to have a 3 to 5 to 6 exit on EBITDA in 6 years. It's probably not the best for them because of the typical exit strategy. Is that fair enough?
Yeah, I mean, you can get kind of creative with the exit strategy. Like, we know the investors in and out, and we're working alongside their legal counsel, the immigration attorney, and then the corporate and/or franchise attorney. So depending on what the objective is of the
Hmm.
client and what the objective is of the franchisor that's managing these corporate locations, then we might present that opportunity, where we might not, and
Yep.
we'll be very transparent and clear on what the intentions are for everyone.
In the service-based space, like, the mosquito companies and, the cleaning companies, does it work
We've
in
done a
that?
lot of these where it's kind of a hybrid approach, where you might have a franchise system that, like, for real estate property management, where the client could own 100% of the franchise, and then the franchisor is out helping them buy an existing portfolio of properties. Could be 30 vacation rentals, it could be 100 single family homes. So from day one, the investor has 400, $500,000 of revenue coming in, and then they do seller financing and keep the seller on as a manager for a year or
Mhm.
two to make sure the contracts are sticky. So there's a lot of different ways to structure that. And another example could be for a landscaping business that we've worked with, where 51, 49% partner, again, the 49% partner is doing all the due diligence, acquires existing landscaping contracts, and then they roll that into this new commercial vehicle. So there's a lot of different ways to structure it, but I do like the hybrid approach for the service businesses, where you're buying existing contracts that are not, it's just a mom and pop, it's not franchised, and then you bring that into a franchise system. And right now, you do have a lot of sellers.
Give me an example of the franchisor actually doing that as a model. We did that in the tax business. When I was in the tax business, there was a program to buy out mom and pops. And I know in different industries, the franchisor kind of has a program. One of the growth strategies to buy out mom and pops. So give me an example or several examples of some industries
Sure.
that are actually doing that. I think you said the property management company is
So
doing that.
yeah, we've seen that in property management, and there's a few different groups that have internal M&A teams where they're advising the franchisee to do that, or they're doing it themselves.
What industries are doing that? Because I love this.
Commercial cleaning, we've
Hmm.
seen that. Real estate property management, insurance. I've seen in the tax side, and then landscaping. I'd say those are the ones that we're seeing most activity.
Let's just use landscaping as an example. So they have an internal M&A and a team, and they are looking for existing businesses for sale. And like, are they getting them on the cheap then?
A reasonable valuation, and sometimes using seller financing, and making sure that if some of the contracts fall off, then they're not owed as much. And there's different provisions to make sure that the contracts are sticky. Because at the end of the day, it could be more the relationship between that landscape company owner and the Walmart that they were servicing, or some other, it could be some soft shopping center that they were servicing. So you never know until you do the due diligence. Well, you never know until you're actually owning that
Yeah.
asset, that business. That you could have the best due diligence in the world, and that will red flags will come up, but until you're actually running the business day to day,
Yeah.
it's very important to do the due diligence, but there is always still some
But then you
risk.
have to have the contracts tight. So once you are doing the day to day, the due diligence is done. The contracts kind of allow for that flexibility or for the unknowns. So a lot of these businesses are, what I'm hearing is that you can acquire basically their customer list or their contracts. It's not like a whole new business, but if they're servicing an X amount of people, then you buy that and now that's on your list, and they'll know, the franchisor knows that whatever that number is, if it's 50 or 80 or 99, they know what typically sticks with
What
the
will drop off?
yep,
Exactly. If
yep,
it's 80, 90, 70%, depending on the industry, that's great.
yep. Think about a franchisee out there right now that has a business, or a franchisor that's thinking, I that might be a good customer acquisition strategy for my franchisees. What would you say to them? How do they even get started in buying out an existing business as a franchise? So this would not work good in the yoga business. I'm in the yoga business, but I'm also in the roofing business as a franchise. Or that might work if it is a business that is, you know, has relationship with contractors, or there's some type of customer value in the customer list.
Where you
But
might have a
that's
certain territory you're working on and you're just looking to expand out. So you're buying the customer your list, and then you keep on the seller for 6 months, 12 months, 2 months, 2 years, and you're giving them some compensation to make sure that it is as sticky as possible.
And that's
Um,
important because you don't want the seller just to go away, because if the seller is the stickiness, or a decent amount of the stickiness to have, instead of 70%, you get 95%, you want that seller to stay on. And like you said, there's things that you just don't know. So the seller is incentivized to get his customers to stay with you. So what does that look like from a contract standpoint?
Taking a step back in terms of like first finding the opportunity, there's a few different ways to go about it where you can reach out to a local business broker in the community. We have a platform. We should have 3,000 plus businesses through our platform, bettedbiz.com. That could be a way to find the opportunities, as well as Biz Buy Sell and a few other platforms. So first is potentially identifying the opportunity, and then signing a non-disclosure agreement, and then you got to definitely work with your corporate attorney to review the existing contracts that are in place. And then if you want to have an amended and restated contract with especially some of the key customers, to make sure that you're protected, and you're going to have to sync with the franchisor, because a lot of franchisors will dictate, what is the standard contract, what is it in the contract. If you're running a service-based franchise, there's definitely a good amount of work up front, and then that you might have to do to transition these clients on. And it's probably not a bad idea to do a contract review and see, how are you protected, and the services you provide those new customers and your existing customers.
I like that. I've seen it work in the past in the tax business, and some of these other industries that I've been in, it doesn't work as well, but it's a fantastic way to grow. Let's shift gears a little bit into go more into your analysis of franchisors. What are some of the things that you are just looking at in general when you start to investigate franchisors?
Good question. So we have a team, pretty small team here in Miami. There's 8 of us that all we do is find and analyze franchises and businesses. And we have offshore folks that are doing a lot of the data entry. But what we first do is scrub the franchise disclosure document. So the last year, and then ideally a few years back. And with that, we're looking at a lot of different items. Obviously, that M19, if they disclose it, the sales figures, what are the closures and openings looking like? It's a huge red flag if they're closing more units than they're opening, or just if the closures are high period. We look at litigation, we look at bankruptcy, we look at the income statement.
Bankruptcy in terms of the founders or the key players.
Exactly. The founders and the key executives of the company. And then looking at the financials they're required to disclose in terms of the income statement, balance sheet, cash flow. how solid is the franchisor and how are they making money? Are they making money selling franchises? And you can see that most of their revenue is coming from the franchise fee, or are they making most of their money on royalties? Or like some franchise systems that have bellied up, like Quiznos, were they making money selling equipment and on the food and all these hidden costs? So it's really important to understand, you're basically entering a marriage for at least 10 years, hopefully. So understanding how your partner makes money and how you can both make money together.
What are some deal breakers for you in when you are just looking at the numbers and the
Sure.
FDD? Or
So,
are there any?
well,
Because is there always something that is like, I need to find out more to the story?
yeah, it's a lot of it. What's the story? Like, there's a franchisor that we are very comfortable with and we put in front of our clients at Visa franchise that they had a lot of closures 3 or 4 years back. But it was a strategic decision where they had franchisees that had been in the system for many, many years, some of them 15 plus years, and they weren't adapting to some of the changes that they had. And they just wasn't a good fit. And there was no litigation because of it, but it just was not a good fit. And they decided to part their ways. It's also important to see what the unit transfers are like. Why are people transferring units? Digging into the numbers in terms of openings, closures, transfers, corporate locations. I'd say only a really big red flag is if there's a lot of litigation against a franchisor, especially if
Yeah.
it's a smaller system and
Hmm.
not like a very large brand like Subway or McDonald's. That's a big red flag. And then bankruptcy, I'd say, is out there as well. And there are some prominent franchise systems that one of the main owners or key executives did declare personal bankruptcy, but understanding what the circumstances were behind it, and that's something that you need to be aware of if you're going to be entering into that relationship.
No, that's perfect. So then you have people that are just going and data mining all of that information, and it's all historical information. One of the challenges that I've had as I look at stuff, and especially as I look at the top 100, the fastest growing, or all these different things, I look at it and the information's old and outdated, which that's just the way it is. I mean, that's how you get that information. What's your philosophy on that? How do you reconcile like the new franchise 100 came out and I'd like those things, but I also think that's really old information. So like,
Yeah, and a lot of the franchise 100 or 500 is based on kind of arbitrary information like system-wide sales. And it also, that's not the best franchise for someone that wants to invest 100, 200K,
mhm,
300K. The FDD, a lot of them are now coming up and had to be revised. That's a good thing for a prospective franchisee with their franchisors, especially in states like California, are having to refile and
yep.
have addendums and reclassify their Item 19 in light of COVID. So that's really important to look at that and some of the information that's coming up. There is still oftentimes a lag, but I think talking to franchisees, talking to 5, 6, 7. We have one client spoke to 16 franchisees to understand how they're doing and what they're currently doing this month and last month and over the last 12 months and seeing their satisfaction. And then we take the consumer to mind as well in terms of Yelp reviews, Google reviews, and we're pretty thorough in terms of going through the majority of the locations for that franchise system and seeing what their average ratings are and what customers are saying about the service provided or product offered by that franchise.
That's really good. And I would suggest that people do that out there. If you're looking at a franchise, look at the reviews, look at the Google reviews, the Yelp reviews, because, and I heard it on a different podcast, someone that I absolutely respect, his name's Jay Abraham. And he said, people, when they're given a review, whether it's really good or really bad, it's done out of most time out of emotion, especially the frustration. So you can really see what people are really thinking or feeling. And as a franchisor, if that's happening, you should do those reviews to see what you need to change. But then as a prospective franchisee, look at those reviews because that tells you a lot of actually what's going on out there in the field. So, and I just like that in general, going out. What do you, going outside of the franchise to do some research? What do you think about researching the industry? So let's say it's the lawn care, the landscaping industry, and you're looking at a particular franchise. What would you
Yeah.
recommend someone do looking at the industry as a whole or just focus on that franchise?
Yeah, great question. So there's a lot of, you want to catch ideally a wave of a franchise industry that's growing. So that's a huge item that you have to look at, and especially in light of the most recent pandemic. We look a lot too at the SBA loan status
Mhm.
of franchises across industries and then particular franchises. So you can see, hospitality industry over the last 30 years, for every 9 loans paid in full, one was charged off, essentially default.
Mhm.
I don't know what's going to be now in light of
Yeah.
this most recent pandemic. Is it going to be 5 to 1? I don't think it's going to be 9 to 1 for hospitality. So you have the historic data, but also what are some of the forward looking indicators to see what that industry is going to look like? Not being in a position that you're competing with Amazon, or that if this pandemic continues on, that you're going to get slammed, like some of the big box gyms, for example,
Oh yeah.
where boutique fitness studios have done much better. And yeah, they've been hurt too, but not to the same extent of big box gyms like Gold's declared bankruptcy this year.
Where do you see franchising going in the next year? Post, we're still in the pandemic. Trump, just to give some perspective, Trump still has COVID, but he's out of the hospital as we record this. So he may or may not be our next president by the time that this gets released. That'll be interesting either way. But where do you see the state of franchising in the middle of all this craziness?
The service industry as a whole is going to continue to grow. And there's a lot of uncertainty in terms of like commercial real estate, where restaurants could get flooded with competition. As I'm sitting here in Miami Beach, there's a lot of opportunity and a lot of for lease signs, and
Mhm.
rates are going to go way down in terms of real estate. And you could have more competition in particular verticals like food and beverage, where there other restaurants are taking over old shops that got put out of business with
Yep.
Amazon. Really looking at how you are operating, and if you're in a business that the client needs to come to you, and your real estate location is really important, or if you have a business that you can go to the consumer or offer products to the consumer, whether that's through commercial cleaning, real estate property management, other home related businesses. And we're seeing a lot of people are able to work from home, and a lot of companies that through 2021 they can work from home. So a lot of investment in the home space.
Mhm.
So anything from roofing to bath and kitchen refurbishing, a lot of those industries I think are going to be well poised in the given environment and going forward beyond that.
Well said. Last question. What are some of the most impactful books that you've read in the past or currently that have just had a big impact on your life, and why?
Good question. Cialdini's Influence
Mm,
is really interesting and insightful in terms of understanding humans and just the emotion that goes into decisions and how you can influence the decisions that other people make. And then 0 to 1 was a really interesting book that basically it's more geared towards startups in terms of getting off the ground. And then I'm a big fan of Scaling Up,
mhm.
which is widely used in entrepreneur organization in terms of the methodology to setting up your business and how to get to the next level and getting systems in place.
Business owners should be reading that just to understand psychology and different things that goes into people making decisions to help you become a better marketer. And it'll help in so many different ways. It's one of those that I think get a lot of entrepreneurs that I know of that are not in the marketing world, they don't really know about that book. But if you're in the marketing world, people know about that book.
Exactly.
Well, man, thanks for coming on. I appreciate the time.
No, Eric, thanks a lot. I really appreciate it.
Thanks for listening to this episode of the Franchise Secrets Podcast. Whether you're watching or listening, please make sure to subscribe to my YouTube channel and to whatever channel you're listening on. If you want my help with anything from buying a franchise to franchising your business, please visit franchisesecrets.com.